This is Chapter 1, an algorithmic version of Exercise 1-17 on preparing a balance sheet. It says, using the above information, prepare an October the 31st balance sheet for Ernst Consulting. In this problem, we've been using the data from the algorithmic version of Exercise 1-15. That data set gave us various items from the company's balance sheet account, from their statement of retained earnings, and also information that would be used in putting together their income statement. So far, we've put together the income statement and found that Ernst had ending income at the end of October of $2,270. Ending statement of retained earnings showed retained earnings of $510. And now we need to put together the balance sheet. So let's complete first the header section of the balance sheet. We have Ernst Consulting, balance sheet. What's the date information we put here? Do we put as of October the 31st or for the month ended October the 31st? The correct would be as of October the 31st. Next, let's look at the major headings for the balance sheet. The balance sheet lists what items? A company's economic resources, better known as its what? Would that be assets, dividends, equity, expenses, liabilities, or revenues? Assets is how we begin the balance sheet. The opposing side of the balance sheet has what information? The claims on the economic resources or the claims on the assets. Does it begin with assets, dividends, equity, expenses, liabilities, or revenues? Well, liabilities is correct. That's part of the claims. The other part of the claims would be assets, dividends, equity, expenses, liabilities, or revenues. Those would be stockholders' equity. Now we can begin filling in the rest of the balance sheet. The balance sheet begins with those assets that are the most liquid or can be converted to cash quickly or are cash already. Notice this is different from how the balance sheet under IFRS is listed. Under IFRS, companies often list their assets in the orders of reverse liquidity. Let's prepare this under US GAAP. What's the first account we'll list under US GAAP? The most liquid asset of all, which would be cash. How much cash does the company have? The data set shows cash of $12,040. What economic resource would we list next? Accounts payable, receivable, cash, common stock, consulting revenues, dividends, land, miscellaneous expenses, office equipment. Well, we definitely want to list an asset, and the next most liquid asset would be account receivable. Let's go ahead and complete the rest of the balance sheet as far as the asset groupings. Next, after account receivables, which asset should we list? Office equipment, office supplies, land. Those seem to be the only three assets we haven't used yet. Office supplies would next be considered the most liquid after account receivables. Following office supplies, we have left land and office equipment. Well, definitely office equipment is used up more quickly than land is. And finally, our last asset would indeed be land. Now let's find the values of these. The value of account receivables from the data set and office supplies. Account receivables, $13,720. Office supplies, $2,990. Office equipment, $17,710. And our last asset would be land. Let's check to see what the value of land was. Land was $45,900. $940. And this $92,400 is a total of what? Our economic resource is known as total assets. Now let's complete the right side of the balance sheet with claims against these assets. Two types of claims: creditor claims known as creditor liabilities or simply liabilities, stockholder claims known as stockholders' equities or simply equity. Let's take a look at our data set. We've already used cash, accounts receivables, supplies, land, office equipment. We've already used dividends, revenues, expenses of all types in preparing our income statement and statement of retained earnings. So there are only two items left from our data set. One is a liability called accounts payable, and the other is common stock. Let's first enter accounts payable of $8,230 on our balance sheet. Next, let's list the remaining account, common stock. Common stock totaled $83,660. With that, we have listed all of our accounts. Or have we? We're missing one more component of stockholders' equity. Do you know what it is? It's not accounts payable. It's not receivables, cash, or common stock. Consulting revenue that belongs in the income statement. Dividends is from the statement of retained earnings. Land is an asset. Miscellaneous expenses, that's part of the income statement. Office equipment, we accounted for that already on the left side of the balance sheet. Office supplies, same thing. Rent expense, that went on the income statement. Retained earnings or salaries expense. Retained earnings is correct. The two components of stockholders' equity, common stock and retained earnings. But where do we get the dollar amount for retained earnings? It's one of the statements we've already prepared. Is it the balance sheet? No, we're preparing that. Is it the income statement? That does not show retained earnings. It must be which document? The statement of retained earnings. The statement of retained earnings shows an ending retained earnings of $510, so let's enter that amount on the balance sheet. And now our balance sheet account is in balance. Total assets equals liabilities plus equity. Let's check our work. And indeed, we've correctly completed the balance sheet for Ernst Consulting.